So you're wondering how much do you actually have to make in a year or in a month to actually buy that house? So maybe like a house like this or this or this or even this. In this video, that's exactly what I've covered here. I'll walk you through exactly how much you need to be making so you can know how much you can actually afford. I mentioned a little bit of actually maybe you should actually consider renting or continue to rent if you're actually renting right now. And above all, I gave you a recommendation that will save you thousands of dollars, so you want to make sure you watch till the end. Alright, my name is Wale Lawal. I am a real estate agent and also a real estate investor here in the Houston, Texas. So you are actually hearing from somebody that has done this as a homeowner myself, as a landlord, and as somebody that has helped so many people to buy and sell real estate. So I'm sharing this with you from my experience. Home ownership is a very, very good thing, and everybody likes to achieve that American dream or the privilege to call yourself a homeowner, right? But you need to know what is the cost, what are the factors to consider, and most importantly, how much do I need to make in a month to be able to afford that house. Now, when it comes to buying a house, there are a couple of rules or rule of thumbs out there that most people will follow, and I call it rule of thumbs. It doesn't mean it's going to be 100% accurate. It all depends on so many factors: your situation, your financial experience, your life history, among other things, your credit score, that determine what you can actually afford. But on a very high level, I will give you these rules and I will tell you my recommendation. Number one of them is the 30-33 rule. So 30-33 means that the first 30 means that you want to make sure that the house you are buying, it's not more than 30% of your annual income. So let's say you want to buy a house of $300,000. That means you should be making $100,000 in a year. That is what that rule is talking about. The second part of the 30 rule says that you should put 20% down, or have at least that 20% as in form of savings accounts that you can easily liquidate. And this is coming because if anything happened to the house, you want to make sure you have some cushion, either in form of equity in the property, or you have it in a savings account or stocks account that you can easily liquidate to solve whatever problem may happen. Because let's face it, home ownership comes with some responsibilities. Some things may break on you, some stuff may not work in, the plumbing issue might happen, especially when you're even buying older properties. So you need to make sure you plan for the rainy day. That's why that extra 30% is there. Now, the third part of the 3x, I said 30-33, right? The third part of the rule says that the total monthly expenses on that property that you are buying should not exceed 3 times of your monthly take home. So, or if you want to put it this way, if your monthly take home is $10,000, you don't want to buy a property that your expenses will be more than $3,000 or 3.3 if you want to call it that way. So what does that mean to you? It means that always keep your budget for housing below 30%. Now, the second part of the rule, or the second rule that actually favor a lot, that I love so much, is the 28% rule. So 28% rule, again, this is a rule of thumb. It's going to be vary based on your situation, and once you actually talk to a mortgage broker, they will have you apply, collect some of your documents, and tell you exactly how much you can actually afford. That is the fastest and easiest way to know. This video is just to give you an idea, so that way you know how much you need to be making. Maybe you're not making enough right now and you have a very high taste that will allow you to strategize on how to probably make more money, or if you have to even switch a job, at least that give you the idea of what you need to start doing. Now, the 28% rule is a rule that says that your monthly housing expenses should not exceed 28% of your monthly take home. So let's say you make $10,000 in a month or $120,000 in a year, then your monthly housing expenses should not exceed 28%. That is what that rule means. And I gave you a couple of examples here. At 6.7% interest rate, you can afford to buy a home that costs $375,000. And this is assuming that you are making $120,000 in a year. And again, that puts you at the $2,800 monthly mortgage payment. So if you actually do a deep dive calculation, you will see that there are some other small fees, but this $2,800 has considered so many things that you have to pay. And this is assuming that you are putting 10% down. So take note of that. Now you can be wondering, I'm making $120,000 in a year, $10,000 in a month. Are you saying I can only buy a house of $375,000? Yes, this is the biggest reason, or the main culprit to blame is the interest rate. In 2020, when the interest rate were around 3.0%, you can actually buy a house close to $500,000 with that same $120,000 that you are making in a year. But as you already know, the higher the interest rate, the less affordable homes you can afford, or the less your affordability, because it means that they are charging you more in interest. Cost of borrowing money is now more expensive. So that's why you see everybody always upset when the interest rate goes up, because a lower interest rate means you can be able to qualify for a higher amount. But with a higher interest rate, your qualification amount will be reduced. So I'll give you more example here. As you can see here, for $150,000 annual income, you can actually buy a home of $464,000, and that brings your monthly payment to $3,504. Also, if you're making $200,000 in a year, you can actually buy a home of $516,000, and that brings your monthly payments to $4,667. So what does this mean? It means that the more money you make, the more you can qualify for. Also, the lower the interest rate, the more you can qualify for, and vice versa. So these are the things you should consider. If you're not making enough money, you might need to double your hustle or make some extra sacrifice to get, improve your finances pretty much. Now, when it comes to lending, lender will actually may be able to approve you for more, because they look at two major things. They look at how much you're making in a month and how much debt do you have. These are the two major things that lender care about. Now, if you're applying for mortgage, they'll be asking you for your pay stub, your 2020, your previous 2 years tax return, some other minor things, just to know how much you make. In terms of the debt, they will be asking you to list how much of, credit card, student loan, car notes, any other mortgage, if you already own a house, that you have, just for them to have an idea what is your debt to income ratio, DTI. Now, they don't like to see anything above 45%, because anything above 45%, you are now becoming a risk to them, and they really don't like, high risk borrower. They like to see that number below 45%. So if you can provide all this one to them, they will give you what we call a pre-approval letter, which is what actually tell you what you've been approved to buy. Now, let's say you provide all those things, they approve you for $700,000 house, and you know that you cannot, comfortably be making the mortgage payment in a month, then you don't have to buy a $700,000 house. But it also means that you cannot buy above. So a pre-approval letter simply means this is the max you can buy. It doesn't mean you should buy exactly, but it also means you cannot buy above, but it means you can buy below. So you can buy a house between, 300, 500, 600, 700, but you cannot buy above. That's what it means. So if you really want to keep your housing expenses low, you can actually buy a house with 20% down payment, and also in the amount of a monthly mortgage payment you can easily afford. Let's say comfortably I can afford to pay $4,000 as a monthly mortgage payment, right? But you know that I like to have a cushion. Even though I can afford a $4,000 for my monthly mortgage payment, I like to keep it under $3,000. Then go buy a property of $370,000 that will keep your payment around $2,800. So those are the kind of things you have to be aware of. And now I mentioned that I'll be giving you the tips on how to actually save thousands of dollars when it comes to buying a house. The tips is that you want to work with a mortgage broker. So mortgage broker, they are like your car dealers that has so many different kind of cars. If you go to Mercedes-Benz dealership, you're only going to be getting what Mercedes products. If you go to Honda, you're going to be getting only Honda product. If you go to Toyota, you're only going to be getting Toyota product. But if you go to an independent brokerage or independent dealership that carries all these products like Mercedes, Tesla, they have Honda, they have Toyota, they have Kia, among other cars they can have. That's exactly what a mortgage broker is. They have all these kind of lender that they work with, and their job is to collect your documents and be able to match your profile with any of the lender they have that they have relationship with, and bring to you which one is the best for you based on your financial profile and based on the guideline that the lenders has given them. So that's what they do. Instead of you calling multiple banks by yourself, they are pretty much doing all the heavy lifting for you, so that way you are actually getting all their years of knowledge without doing all those work. And this is the biggest part of it. You don't actually even pay a mortgage broker. A mortgage broker is being compensated by the lender. The lender is compensating them for their time, for their energy, for bringing them a customer, which is you. So this is a very smart way I always advise my clients to go, because you don't know what you don't know, and mortgage can be sometimes complicated. So why not leave it for the expert to figure that out for you? Now, if you want a recommendation or you want me to actually look into your personal situation on how much you can qualify for, or you need a recommendation for a lender or a mortgage broker, reach out to me and I would love to pass those connections to you. And these are contacts that has cost me a lot of years to actually build. I have them ready. Just reach out and I will send them to you. You can see the link to my calendar below. You can also see my phone number below. I'm very accessible. I am always quick at responding to people and get you going. So that being said, if this is your first time, make sure to like this video, subscribe to this channel, click on that notification bell so I can let you know the next time I have a new video. And please share this video with anybody and everybody you think will benefit from this, because when you do that, you are not only helping my channel to grow, but you are helping somebody that probably need this information more than you do, and you never can tell how you can change their financial trajectory by sharing this video with them. Thank you so much. Comment below, let me know what you like about this video, let me know what you think I'm missing, let me share your own experience, and let's connect. Above all, you can follow me on Instagram. This is my Instagram handle, and you can also of course follow me on other social media as well. I'll see you in the next one. Bye bye.